Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Hello everyone, so Merry Christmas to everybody. So let's take a look again on the market. Well, on the technical side, we do not have a lot of changes since our Friday discussion. The one moment that makes us worry about the bullish perspective here, as we'll discuss a bit later. In general, this report we have dedicated to the Omicron fears that stands across the globe. And we think that this reason, I mean the topic of the Omicron and in general the global events that is happening around it, will be used to push the market society and in general investors back in the sentiment of the fear. So it was an attempt within the first 2 weeks when Omicron news have been released to play it out very fast and withdraw this topic, because markets already are living with Delta variant for a long period, and everybody could say that it hardly makes really very significant impact on the market sentiment. Maybe just in the beginning when it just has appeared, but right now it seems it's dangerous, it's fading gradually. So, and investors were trying to play it out, the Omicron fears, fast as well, but now it seems that it doesn't match to the targets of the masters, those who are controlling this event and in general was to manage the overall pandemic progress in the world. And well, we think that is some geopolitical tool. It's arguable position, but we see the logical conclusions and logical results of the pandemic and the global geopolitical struggle between the United States and China in particular. There are some secondary targets also stands on the table, but this is the primary one, and we have the first results already have been achieved with this. And we think that Omicron topic will be used at the full capacity to push markets again in the fear sentiment, to show that the risk aversion has happened too fast and it's a bit early to do this. And we already see lots of canceling of the flights, breaking the holidays, new lockdowns, the boosting acceleration and so on. So everything that we saw previously already. That in turn makes us think that the current relief on the markets and some attempt of risk aversion looks a bit too early and temporal. And we, on the shorter term, we do not exclude that euro currency could try to complete the short-term targets that we have set based on recent more or less bullish price action on intraday charts, or maybe euro will try to reach 1380 or even 1420 targets. But we think this will be temporal, and later on, market should turn down again, because this is no doubt the United States dollar looks much better, and the current using the Omicron reason, it's probably the status quo should be reestablished and demand for United States dollar should rise again. So that's our position based on the report that we have prepared this time. So in the shorter term perspective, well, the few moments that we have on the intraday charts, on the daily mostly, you could see the thing stands the same. But on the 4 time frame chart, take a look. On Friday, market has shown another drop here. That might be worrying sign for a bullish perspective. So in general, it doesn't hurt yet our major setup because it's based on this strong bullish reversal candle in the grubber, and we keep position with the break-even stop somewhere around the grubber's lows. This pullback hasn't touched it, and in general it keeps our bullish context valid, but at the same time this is a bit warning moment, because actually guys, with this upward action, retracement already is done. It's a major retracement to the confidence support. That should be the continuation to the upside if market will not be able to proceed, and actually the retracement, that once again retracement, it's already a not very good sign, and in general if market will not be able to proceed higher in the beginning of the week, that will be this will really increase the bearish risks, and that market could turn down immediately and start dropping. So Maybe this was because of the thin market. We will see it. But in the Monday, Tuesday, if market will not be able to start upward continuation, be prepared for a raising of the bullish context and breakout of this area and starting with the downward action. So in this case, the downward action right to our target on the daily chart that we have around, if you remember, somewhere 11:30, 11:50 area that we have discussed last time. It could start it right at this point, because following by the market mechanism suggests the bullish market, so just suggest how it has happened. Here was an extension, contraction, new extension to the OP, ABCD retracement, right to the conference support. It's already done. And that should be new action to the XOP, but it stumbled on Friday suddenly. That was because just some statistics have been released on Friday, right? And now you can see drop again back to the support. This is sign of weakness. Maybe it will not lead to the serious consequences for this bullish setup, but keep an eye on the market behavior on Monday, Tuesday. Inability of the market to break this resistance around 1340 area will be a bright sign that chances on the collapse here will increase. So market, to keep the bullish context, has to break through this area. Only in this case, we could suggest reaching of the targets that we have around 1375, 1380 area. So that is the moment that have happened on Friday, and that we need to keep an eye on, taking in consideration, and watch what will happen in the beginning of the next week.